from Illinois, Mr. Casten, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Nice to see you all here. So last week, my colleagues across the aisle voted to denounce socialism in all its forms on the House floor, and I would like to use my 5 minutes to join them in a full-throated denunciation. We are seeing capital markets move massive amounts of capital right now to protect themselves from climate risk. We're seeing huge surges away from properties at risk, coastal flooding, wildfires. We're also seeing a flight to quality. It was just looking just now, right now, ExxonMobil and Chevron are both trading at a 6 times multiple on forward earnings. NextEra, clean energy developer, is trading at a 15 times. First Solar is trading at a 60 times. We are seeing this massive flight of capital. We are also seeing the single biggest class of investors are these investments are these ESG funds. PricewaterhouseCoopers reported there were $18.4 trillion in global assets under management at the end of 2021, projected to grow to over $30 trillion by 2026. This is capitalism red in tooth and claw, as they say. And yet we're seeing a number of states who find capitalism uncomfortable when it's not benefiting them. And so we're seeing states that are now blocking their pension funds from investing in things that are optimizing risk and return if it has the name ESG in it. Mr. Chair, I'd ask unanimous consent to enter 2 documents into the record on a couple of points I want to cite here. These documents show that in Texas, this law is costing taxpayers $532 million, as you'd expect. If you run away from capital markets, bad things happen. Kentucky, Florida, Louisiana, I'm forgetting some here, West Virginia, more than $700 million a year. In Indiana, the estimate is that this is going to cut pension returns by 125 bips, from 6.25% to 5%. And if we are going to denounce socialism in all its forms, we need to denounce it even when it comes from our friends. And my good friend, Mr. Barr, is now leading an effort to overturn a Department of Labor rulemaking that would allow fiduciaries to consider climate risk and ESG factors when selecting investments. And I'm here to denounce socialism in all its forms. Ms. Marcellin, do you believe that retirement savings are at risk if that Department of Labor rulemaking is overturned?
Thank you, Congressman Casten. Yes, absolutely. Climate change is a hidden risk for retirement savings. As you said, the anti-ESG movement is not only trying to get pension fund fiduciaries from ignoring the risk of climate change, but frankly also ignoring the opportunities. There are those in the Senate right now that's trying to repeal the Department of Labor ESG rule, and that will put retirement savings, especially if those of working class, get at risk, and like I said, foregoes potential investment opportunities as well.
So help me out with what that risk means. Who's going to bear the cost, whether it's these Indiana pension funds that are seeing lower returns? Who ultimately is bearing the risk of this redoubled commitment to socialism that's going on in these states?
Yeah, ultimately it's the workers, and many of whom are hourly wage workers who was hoping at the end of a long career, maybe they retired at 60 to get a pension, a steady pension to fund themselves into their seniority and live a comfortable life. And at the end of the day, those are the type of people that are suffering.
Well, thank you for your time. And I just make the observation, and many of my colleagues have heard me say this before, the absolute loneliest position in Washington is to advocate for competitive markets. No one ever comes to our offices and says, I wish my industry was more competitive. And when you are on the losing end of capitalism, you can either adapt your business, you can learn to pivot, or you can call it woke. And I hope that all my colleagues around here hold up the vote they took last week and denounce socialism in all its forms as we try to look out for the workers and the American people and the investors in our economy. Yield back.
The gentleman yields back. The gentlewoman from California, Ms. Kim, is now recognized.
Thank you, Chairman Barr. I would like to yield 1 minute to you so you can make your remarks.
Well, thank you for yielding. I'll be brief, but I couldn't resist the temptation to rebut my good friend from Illinois and his comments since he invoked my bill and my legislation. Look, I have no problem with anyone who wants to steer their own investment, deploy their own capital into less diversified, lower performing, higher fee funds, if that's what they want. If they want lower returns, that's capitalism allows that. I'm not for socialism. I'm not for forcing people to allocate their capital in ways that they don't want to. But the point is that ESG funds over the last 5 years have underperformed the broader market 250 basis points per year. And it's because they're less diversified. They exclude energy stocks, which have overperformed the market. So if you want capitalism and free flow of capital, you do not steer people into lower performing, higher fee funds like ESG funds. And let me just make the final point before yielding back to my friend from California. The flight to quality that my friend from Illinois talks about is not a function of improved corporate performance. It is a function of an asset bubble. It's a function of a growing pool of capital chasing socially conscious investment opportunities that have higher fees and lower returns. The best reason for investing in ESG-oriented companies is that everyone else is doing it. That is the definition of an asset bubble. And with that, I yield to my friend from California.